Before today, I hadn't bought many cryptos in a while. I've kind of been on the sidelines, just watching, waiting for Bitcoin to make a move. But today, I decided to start DCAing into a couple of assets. And in today's show, I'm going to talk to you guys about the assets that I am buying at the moment. I'm just taking it slowly, but I am getting more active with some of my buys now that the market is stabilizing. And yeah, I want to share that research with you guys today. Make sure you smash the like button, subscribe for more crypto content, and let's get straight into the show. So the first category of tokens that I am looking at are decentralized perpetual exchanges. I have this theory that 2023 and 2024 and beyond will be the year of the perp DEX. Now, we've already seen immense growth across multiple perp DEXes like DYDX and GMX. I think this is because there are a few distinct benefits, like obviously no KYC is a major benefit, no counterparty risk is another benefit, more security and sovereignty are all benefits versus centralized exchanges. Now, I believe in a future crypto ecosystem where decentralized exchanges and centralized exchanges work in tandem with each other. So the first purchase that I decided to make was in the realm of the DEX perp sector. Now, if you want to invest in the DEX perp sector, this sector follows something that I like to call real yield. We know this narrative was quite big a couple months ago, but some of these tokens have now cooled off quite significantly. And real yield is basically when a protocol pays yield to its holders based on real revenue that it is generating and not just fake or falsified token emissions. So if you want to invest in the sector, the first project you can invest in is DYDX. I do like DYDX with its upcoming L1 that they are building on Cosmos. However, the cliff is very, very scary. We could see that the emissions really start to ramp up in Feb 2023. This is enough to put me off buying DYDX until next year. So this is one that I would like to accumulate in the future, but I'm kind of putting it to the side just a little bit in the short term. The next thing you could invest in is GMX. Now, I have no problem with GMX. I think GMX is a great platform. It's on Arbitrum. It's easy to use. It has a good interface. The only issue I'd say about GMX is the fact that it has had a significant rally, and B is now valued at a $288 million market cap. The FDV is actually closer to 470. So GMX is a great project. No doubt about that. The stats are very, very impressive. This is definitely one in the perp DEX sector that you can look at. However, it is slightly too high on the market cap front for me right now in this market. So that led me to my third finding. And my third finding that I did talk about a few months ago on the show and said I wasn't buying, but I actually did decide to buy recently or start DCAing into is actually Gains Network or GNS. And I'll tell you exactly why I am starting to DCA into GNS. Now, overall, in terms of L1s, I am waiting for a bit more continuity with the market and a bit more clarity over the macroeconomic conditions. But the thing is, the thing with DEXs is that they actually can perform quite well in times of volatility, and they actually can perform quite well in downward times because when they generate more trading revenue, they accrue more value for their holders. So we did actually see GMX rally into the bear market. So there are certain tokens in the bear market which I would consider a safer risk profile to hold than others. And I do view perp DEXs as one of those narratives which can run or can at least perform well on its own. Now, that doesn't mean that it isn't bound by market conditions, because it is. Obviously, when the market goes up, these tokens go higher. When the market goes lower, generally these tokens go lower, but they can buck the trend. And because they can, that just alters the risk profile a little bit for me to start having a bit of a nibble. Now, I'm not going crazy, of course, but I'm comfortable having just a little bit of a nibble in some of these protocols. So I will explain to you what GNS is and why I like it. And then obviously at the end of the video, I'm going to get into the second project that I am also buying. So in the last 30 days, they've done over 2 billion in trading volume. They have more than 700 new users, and they have had massive development progress. Now, for all of you that don't know GNS, it is similar to GNS. It's a perp DEX, but the GNS token itself is the core token behind gTrade. They offer 71 assets, so 39 crypto pairs, 10 Forex pairs, and 22 stocks. So they offer a lot more pairs than GMX. I think this is one of the things that I like about it versus GMX, is the options you do have for trading here. And also, if you want to trade Forex and you want to trade stocks, you can do so. So it does appeal to a slightly different market as well. Traders can trade up to 4x with 150x leverage. That's slightly more than GMX as well. And the collateral for the trades is to be paid in DAI, and up to 75,000 DAI can be used as collateral per trade. The very interesting and unique part about Gains Network is that the trading's synthetic, meaning you never take possession of the underlying asset. you stay exposed to the price for the duration of the trade, and the protocol can offer 71 assets without you having to own any of these assets on chain. This is done via the DAI and GNS mechanism. I'll give you a quick explainer about how that actually works. So essentially what happens is the synthetic tokens are backed by a DAI vault where users can deposit DAI and earn yield. So those that are very risk off can deposit DAI to earn yield back. DAI is a stable coin that is pegged to the US dollar. The GNS/DAI liquidity and the GNS token. DAI is taken from that vault. So the vault where people deposit DAI, you're paid a reward of the trading volume, but in exchange for the ability for users to take DAI from the vault, to pay the traders or the protocol, to pay the traders the profit and the loss on the positions if their P&L is negative. So obviously it takes DAI to pay out users when they make money, and the vice versa as well happens when DAI gets replenished back into the pool if it goes the other way. So through a single liquidity pool and DAI vault for all orders, gTrade has a wide variety of trading pairs, but also uses this GNS and DAI mechanism to balance its protocol. Now, this can result in what we call an overhang, meaning there can be periods where there is slightly more GNS in circulation because they need to mint more GNS if traders are profitable. And then it also goes the other way. You can also burn GNS if traders are running at a negative P&L. The thing is, though, we have seen historically trading platforms be very profitable because most traders lose. That's just the reality of it. And they do technically have a house hedge due to the spread fee. So most traders end up losing. Now, in terms of the tokenomics of the Gains network itself, there is a supply cap of 100 million GNS. This is what I was alluding to before. However, it started with an initial supply of 3.8.5 million GNS tokens. Because most traders lose, 25% of that has already been burnt down to 28 million. And the current supply stands at 30 million. I think it's slightly less now, of which 75.2% is staked. So you can only buy it in QuickSwap because it's only on Polygon. They're getting a launch on Arbitrum soon, though. So technically, this is, to this date, a deflationary asset, which is very good. The $100 million cap would only... basically, this will never be reached. This is just an arbitrary figure that will never be reached because it's deflationary. This would only be reached if there was some sort of, if there was a real issue in the protocol where users were profiting or there was an exploit and they needed to mint GNS to balance out that GNS DAI pool. I don't think it'll ever be reached, though. And we have seen to this date the current supply continue to decrease. So that's basically how it works. This is what the platform looks like. It's a very easy and intuitive platform to use. One of the reasons why I prefer GNS to GMX is just the ease of use on the platform. It's quite like a nice platform to use. It feels good. It has more pairs. It's just a nice interface. And at the end of the day, if you're going to get users, you need to have a nice interface. And interestingly, it outperformed GNX in total daily volume yesterday. And Forex now accounts for 75% of GNS's weekly volume. So having those Forex pairs, especially right now when they're so volatile, we saw the euro, the pound crash against the US dollar, the Australian dollar pumped against the US dollar, then dumped again. This volatility is good for GNS because of the large Forex rating that the platform has. We can see the breakdown of pairs here. So that is another factor. Now let's have a look at some of the stats, right? Because at the end of the day, if we're investing in something, we need to substantiate the stats. I highly recommend you do all your own research and look at this stuff in your own time. I'll just point out some of the things that I have taken of note that I do like. The first one is the gTrade volume. We can see today they did 13.4 million. Yesterday, 79 million. Day before, 43 million, 50 million, so 100 million on one day. So we can see it's quite high. It ranges between 20 and 100 million dollars. If we go back in time a little bit, we see the platform, back in the bull run, it was doing 8, 9, 10 million. So GNS actually has a more trade volume now in the bear market than it did back in the bull run in November. We can see 6, 7, 8, 10. It did hit a peak of 30, but it didn't get close to the 100 million figures that it's printing during the bear market. So that's quite interesting that it's doing more volume now. The other stat that I want to take note of is the amount of daily users. We can see daily users are now sitting at around 268 to 300. Back then, it was only like 100 active daily users. And in terms of new users, the platform gets roughly 15 to 30 new users per day. This isn't a lot of users, by the way. Now, the fact that it can generate over $70 million worth of trading volume, despite having only 200 act or 300 act daily users, is quite astonishing to me. So it means a lot of the people that are trading on here are essentially the whales. Now, if this ever gets mass adoption, just think about how this trade rev will explode. So if it can do this much trade volume, 70 million in the last 24 hours, based on 250 users, imagine what it does if there's 1,000 users. And even 1,000 users compared to Binance or ByBit is absolutely nothing. They get tens of thousands plus users on their platform. So these perp DEXs are a niche and they're small, but they're a profitable niche. And that's why the protocol overall, if you annualize its current trade fees, would generate around $8 million in pure profit per year, which is obviously paid back to holders as well. So we can see the breakdown in fees. So this is the trading volume. So they don't make 70 million a day. That would be nuts. That's the total volume. In terms of what they make, so what the project gets in terms of revenue, is roughly 34K today. Yesterday, 30. The day before, 26, 27, 33, 58. It does vary. There's a day with 14. Once again, that's a lot higher than it was back in the bull run. But if you do an annualized basis based on yesterday's trading fees, it's like $7 to $8 million a year, which are paid back to holders. This means the platform trades at a PE ratio of roughly 30. So we can compare this to a traditional stock like Apple that trades at a PE ratio of 15. That's considered a pretty safe tech stock now. This trades at roughly double that value. Obviously, though, the variability of the trading volume is where the risk kicks in, not necessarily the PE. But yeah, there are a lot of cool stats here I would check out, but that is the underlying narrative here. Basically that we expect PEP DEXs to grow in volume. We expect the trade volume to follow. That means users will be getting paid more revenue. Pretty simple. Now, this may not necessarily play out. That's why I have a plan. If it doesn't, I'll get to that in a second, how I'm actually accumulating. So here's some GNS alpha. Here is some alpha hot off the press. They're getting an Arbitrum launched in 3 to 4 weeks, which is good because, to be completely honest, Matic sucks. I tried to bridge tokens from Ethereum to Matic last night, and it took like half an hour, and then I ran out of gas, and then I needed to buy gas, and then the gas took like 20 minutes to process a transaction. I don't know, it's just weird. For some reason, the Matic network's it's always been a little bit clunky. So Arbitrum in 3 to 4 weeks is great because GMX is on Arbitrum. We know how popular GMX has been over on that side. It's doing like twice the trading volume of GMX, or more on some days 3 or 4x. And that is because it's on Arbitrum. And I think that this will be a major, major win for GNS actually to launch on Arbitrum. A few weeks after the launch, Polygon will update the DAI vault, and Seb, so the founder or CEO of GNS, will buy 600K of GNS back and execute a buyback. And then he did say on the Telegram that they have another surprise coming very soon before Arbitrum in 3 weeks. So I just thought, look, if I'm going to be accumulating this for the long term, because a project like this to me is a long-term bet. This isn't something that is a short-term trade. I'm happy to go underwater on this trade. So it's currently at 270. If it hits $1, I'll just buy more. If it hits 50 cents, I'll just buy more. Why is this the case? Because I like the product. I like the narrative. And at the same time, I do think it can perform in a bear market, although many other tokens can't. So that's the reason why I'm taking a nibble at GNS. Obviously, the Bitcoin bottom likely isn't in, but that, in my opinion, isn't going to stop me from starting to DCA into projects I like. The thing is, though, you just have to make sure you have enough cash flow and 2 stable coins to actually continuously be able to DCA. So let's say I put $1,000 in this month and I want a total position of 10K, and I do that over a 10-month period. I need to know that I have $1,000 available for the next 9 months to keep DCAing. If you do a buy now and then the market tanks and then you panic and you don't buy more, that defeats the purpose of DCAing. And frankly, a project like this wouldn't be for you. So you do need a strict plan. That's why I have a strict plan, a strict DCA amount per month that I've outlined that I will be DCAing into a project like GNS. And now GNS isn't the only one. It's just the first one that I decided to buy on my new DCA program. And that's why I'm talking about it today. Now, if we do look at the market cap, 83 million, we can compare this to GMX at 288 million, but a fully diluted of 469. So if we look at the market cap, GNS is currently a 3.4x away from GMX, although GMX, if you take it to account as fully diluted, is a 6x away. So still a bit of a discrepancy here, one that I think will eventually come down. Look, GMX does roughly 4x the trade volume. It's fully diluted, trades at 6x. I guess the market does price in the risk of Gains Networks hitting its total supply cap, but it started at 35 and it's at 28 now. And I just don't see a scenario where it's going to come close to that 100. Like, to be honest, I'd be surprised if it hits 38 again. Now, this is possible that it does so. We can see, I'll actually show you, this is the GNS supply. So it reached a bottom of 28, back up to 30, but it did start at 38. So it has come down significantly. So that is just something to keep note of. If there was a variability in the way GNS was minted due to, let's say, an exploit or traders being extremely profitable over a period of time, GNS technically could be minted up to that 100 cap. But as of now, the max supply stands at 28. So there is a discrepancy here, which I do like. I think it is favorable for an investor. Now, yeah, that's just what I'm doing with GNS. I'll talk about this project a lot more in the future. Just wanted to give a little bit of an intro into it today. Let me know what you guys think in the comments. It's only on QuickSwap right now for the ones asking where to buy it. Remember, this isn't financial advice. You have to do your own research and determine whether this is a project that you like. Now, I do want to talk quickly though about the other thing that I bought. And this this might surprise you guys, but actually, just quickly before I get into what I bought, remember to sign up for the trading competition, which started on Monday. I did open my first trade, although it was a spot trade, so I'm not sure if it counts towards the competition. I'll show you what that spot trade was in just a second. But if you're not signed up, I mean, there's $100,000 worth of prizes up for grabs, and currently there's only 1,000 people involved. So just do the math there. Like the chance of you finishing top 10, not bad compared to the 1,000 worth of participants that are only signed up right now. So you can win $10,000 in first. Sorry, my Wi-Fi just cut out. Get involved in the trading comp if you're interested. I think it'll be a lot of fun, and I'll be trading alongside these guys. So link in the description. You just need to sign up for a Banter ByBit or a Banter BitGet. Once you're signed up for one of them, then you can register under the registration link. So the token that I bought that did surprise some people when I told them was Aptos. Now, wow, feel free to rip into me in the comments. This is like more of a gamble trade. So with my GNS trade, this is quite, what's it called? A predetermined trade where over a certain period of time, I'm DCAing, I have high conviction, long-term. It's quite a measured trade. Whereas my Aptos trade is more of just kind of like a quick in and out, more of a gamble type trade. So two very different risk profiles, hence why I put a lot less money into Aptos. The reason why I did it is because I think, the sentiment is extremely bearish. Most people are shorting. In fact, so many people are shorting that APT shorts are paying 350% just to be short, which is crazy. It means there's so many shorters that they are literally paying you. You have to pay them to short because they're trying to incentivize you not to short to lower the spread between the futures of APT and the spot of APT. That's how funding rates work. So funding rates will try and incentivize people to take certain trades. Right now, so many people are shorting that the demand for it is so high that you literally need to pay 350 APR to short. That is crazy to me, and it probably has been the worst sentiment launch ever. Like, if you look at the sentiment, it's awful on Twitter. Everyone's ripping into Aptos. They're hating on Aptos. Now, long term, I'm not going to comment on Aptos today. Look, it has a lot of funding. It has big backers, but at the same time, it's unproven, and clearly the community doesn't like it. My job isn't here to talk about the long-term price potential of Aptos. However, I did buy some Aptos, and the reason why I bought it was because it's just simple risk reward. So right now, it's at a $1 billion market cap. 7 billion fully diluted, although this doesn't really matter because as you can see from the vesting schedule, I mean, this is a 10-year period that it's vesting. Extremely long time, almost too long for us to really scrutinize that total supply cap. But if we do look at the market cap, it puts it at rank 51. This could be a top 25 project. And the fact that it's backed by SBF and backed by CZ, do they really want to take a loss on their investment? That's what you got to ask yourself. Like, these guys invested at a 4 bill valuation. Are they really going to sit there and take a loss on their investment? Maybe they just screwed up. Maybe they just made the wrong decision launching it now. But I would like to think that the risk reward remains in the camp of the longers. Now, I wouldn't be shorting this just because it's ridiculously risky to short a token on its first couple days. And if you do look at any kind of leverage trade here, it is extremely risky. So I'm not leverage trading. It's spot only. And I just did a little buy. It's kind of similar to what people did with ApeCoin when it launched. Remember when Ape launched and everyone said, oh, Ape's going to go to $0. Ape's going to go to $3, which it did end up going to $3. But before it went to 3, it pumped to 25. And the thing is, although this may go down in the future, there is a chance that we do get that pump. And I just want to be at least exposed in the case we do. If we don't, I'm okay with that. I'm only putting in gambling money. If it doesn't, if it goes to $2, whatever. Like, I really don't care because I'm putting in such a little amount of money. But if it pumps, at least I'm exposed to some upside here where I can make a little bit of money. So for me, it's just a decent risk reward play because you just can't short this token. So I'm just choosing to spot long instead. Now, as I said, it's short term. So I put 30% in today. I'm putting 30% in over the next couple days. I'm going to wait for a dip, buy another 30%. And then that's me done. If it pumps, I'll take heavy profits. In fact, I aim to be all out of this within the next 3 weeks or the next month at the very latest. If it dumps, I have 2 DCA opportunities to buy more. And hopefully at some point it is higher than $7. If it's higher than $7, I make money. I mean, if it's lower than $7, I don't make money. But if it does go to, let's say, $6 today and I do my next 30% and then it goes up to $7, technically now I'm net profitable by 25%. So that's what I'm doing with Aptos. Slightly risky, but look, it's just a trade. Basically, the GNS thing is very different. I just want to make this clear. My GNS trade is long term. This is probably like a 12-month time horizon. I'll accumulate GNS. I like the protocol. It's in my long-term DCA DeFi portfolio. This is a long-term thing. Aptos is a short-term thing. They're different trades, very, very different trades. In terms of the tokenomics, maybe I'll go over this in a future video. Basically, the TLDR is not bad, but not great. And the reason why it's not great is because there's not much clarity as to how and why tokens are being emitted. How are they being released to the foundation? We already know that they can actually stake them and farm and dump them. So we already know that there'll be more supply pressure than currently indicated. We know 82% are locked. We know that there's a very long vesting schedule. But I think this felt a little bit rushed. Honestly, I think they saw the backlash on Twitter and they said, fuck, we have to quickly come out with a tokenomics update now before we get more backlash. So they just released like a tokenomics update because this seems it doesn't seem very comprehensive. There's not much information on the token at all, to be completely honest. So I'm like, if you were investing long term, you really got to wait for more info because this is like a big risk. But short term, you guys know my logic. And the logic is the VCs won't want to take a loss. They'll probably try and squeeze these shorts. There's so many shorts that a squeeze is probably more likely than the short side playing out. And if the short side plays out, you just put a little amount of money in there so you don't lose much. So that's my plan with Aptos. But yeah, very different trade to my GNS trade. So yeah, I do want to go on Instagram right now though, because I want to chat to you guys for a little bit longer, hang out, answer any questions. You might have some questions about GNS that I can answer. So you might have some questions about Aptos that I can answer, or just anything else. So head over to the Instagram. I also follow some people on Insta that do decide to follow me. I follow them back. So yeah, there's a link in the description to that. It's this one here. And yeah, you can click on that and join me on the Insta Live. And just a quick shout out as well to our sponsors, DeFi Chain. Link in the description to DeFi Chain. They are basically a way for you to use your Bitcoin in DeFi. So stake your Bitcoin in a liquidity pool on your phone. You can also swap Bitcoin or keep it in your DeFi Chain wallet. So it's like it's like bringing DeFi to Bitcoin. So quite cool as well. There's a link to check that out if you're interested in earning some staking yield on your Bitcoin. All right, awesome. I will see you in the next one. Peace out. I got to end it myself because my producer had a power outage and I also had my Wi-Fi cut out halfway through the show. So yeah, all right, I'll see you in the next